Fred Earnest, the president and CEO of Vista Gold Corp. And Vista Gold holds the Mt Todd Gold Project, a permitted and ready-to-build development stage gold deposit located in the Tier 1 mining jurisdiction of Northern Territory, Australia. Welcome, Fred. Nice to see you again.
Nice to see you too, Anna. Thank you.
So you presented to investors last September and have had a lot of positive news since then. So we're very happy to have you back. But for those who might not be familiar with Vista Gold, let's take a little time to go over a brief presentation and talk about important updates since we last spoke.
Very, very well. I presume that everybody can see the slides now. I will be making a few forward-looking statements, but certainly we're delighted to be back. Vista Gold is traded on the NYSE American and the Toronto Stock Exchanges under the symbol VGZ. We have roughly 124.5 million shares issued and outstanding, a market cap of about $94 million. And at the end of the year, we had $16.9 million in cash with no debt. Down at the bottom right, you see a list of our largest shareholders, with Sun Valley Gold being our largest institutional holder. Board and management combined own about 4.2% of the shares of the company. As Anna indicated, we own and are building value based on the strengths of the Mt Todd Gold Project. And as I'll show you here in just a moment, this is a project located in the Northern Territory of Australia. It's a project that's permitted, ready to build, and enjoys the benefit of existing infrastructure. We are building on the technical and financial strengths that have been demonstrated through feasibility studies that have been completed at a large development scale. Key drivers for this year, we last year completed a drilling program, and we expect growth in gold resources as a result of that program. But perhaps most importantly and most excitingly is the new feasibility study that's focused on a smaller scale project, 15,000 tons per day versus 50,000 tons per day that was completed previously. This will generate significantly reduced initial capital. We're prioritizing the reserve grade over tonnage. I'll talk more about that. And at the same time, we're preserving the option for future expansion. Now, if you look at the right side of the screen, you see that the project is located in what the Australians call the top end of Australia, the very northern part of Australia, about 250 kilometers southeast of Darwin, which is the capital of the Northern Territory. It's very accessible. In fact, maybe one of the most easily accessible development stage projects in all of Australia. Some of the highlights of what we're doing there with this new feasibility study are across the top of the slide. We've selected a size, as I indicated, 15,000 tons a day, or 5.2 million tons per year. What the targets of this study is, I mentioned lower CapEx. We're targeting an initial CapEx of $400 million. That's a 60% reduction from our previous feasibility study at the large scale. We're looking to raise the reserve grade. We're targeting 1 gram gold per ton. That's a 25% increase from our last feasibility study. As we mentioned, the throughput is coming down, and that's in part driving the reduction in the CapEx. The throughput is about a third of what the previous studies were. We're targeting average annual production that will, and estimate that it will range between 150 to 200,000 ounces of gold per year at this throughput. And that's something on the order of 35 to 40% of our previous study. Now the study is in progress. We're making substantial progress, and based on my recent meetings with contractors, I feel comfortable saying that we're essentially on time and to deliver the project as anticipated the middle of this year. We believe that the creation or the completion of this feasibility study will be the key to creating long-term value for our shareholders. It will provide a catalyst to attract a broad interest from those seeking permitted, ready-to-build projects like Mt. Todd. It underpins our strategy for per-share value appreciation by minimizing dilution and managing risks. It demonstrates an achievable path for project development through could be a number of different options, a joint venture partnership, other form of strategic transaction, or advancing on a standalone basis if the right market conditions exist. In undertaking this feasibility study, we're leveraging the technical work that's been completed previously for the 50,000 ton per day case. And we're adopting some principles like fit for purpose design. It'll continue to have a conventional flow sheet. We'll be using contract mining and third-party power generation, as well as established design construction practices that are common in Australia. One of the benefits of the Mt. Todd project is that we have it's a brownfield site, and so we have an incredible amount of existing infrastructure. You see in the picture on the left, this is what the project area looks like at the present time. We have paved roads all the way to the site that connect to the Stewart Highway, which runs from Darwin on the north to Adelaide on the south. There's a natural gas pipeline, which we will use to generate our own power for the project. We're already connected to the Northern Territory electric grid, and that will provide power for construction. We have in the very back at the upper right, you see the freshwater storage reservoir. This will provide, we capture rainwater, and this will provide water for the project. We have the advantage of having a tailing storage facility that was built by the previous owners that will have capacity for about 90 million tons. Obviously that reduces our initial upfront capital. And then the plant site, we're gonna use the area of the previous plant site for the new plant, and that means that we'll have considerably less civil works to undertake once we start construction. Now, I think there's an interesting phenomenon in the market that I think will help all of you watching this today understand what a tremendous opportunity Vista Gold is and the way that Mt. Todd is positioned. Last September, S&P Global Intelligence published some research that talked about the number of major gold discoveries over the last 35 years. And if we look at those by decades, from the period of time, the 1990s, there was 140 some deposits that were larger than 2 million ounces that were discovered in that 10-year period. In the next decade, from 2000 to 2010, that number dropped to approximately 120. In the period of time from 2010 to 2020, that number dropped to approximately 40 new discoveries of that size. And since the start of this decade, in other words, starting in 2021, we've had 5. What this says is that we as an industry are producing gold at a rate faster than we're finding it. And so as mines deplete and they begin producing lower and lower grade material in order to sustain production, projects that have already been discovered that have been advanced through permitting become much more attractive, especially those like Mt. Todd that have demonstrated feasibility, lower risk because of location or jurisdiction like the Northern Territory. They offer a faster pathway to production as compared to a brand new discovery that will need a lot more drilling. We envision that there will be renewed M&A activity. This will drive greater interest on the part of those who want to be partners or acquire projects like Mt. Todd. All of these things, we believe, bode very well for the future of Mt. Todd. Now, just briefly, we have tremendous exploration potential. The resources that we report, 9.4 million ounces of total resource, 7.8 million ounces of measured and indicated, are all located inside this little red box in the middle of this map. and that's the boundaries of our mining tenements. That blue irregular shape polygon outside of that is the boundaries of our exploration licenses, and that covers almost 1,600 square kilometers. And within that, our exploration licenses cover 2 structural corridors that are known to be a host to gold mineralization. The southern one, where the Batman deposit is the Batman Driffield trend. The Cullen Australis trend is farther to the north. And our geologists are continually undertaking grassroots exploration activities on this large land package, and I've identified a number of targets. Prior drilling, specifically within the boundaries of the mining license, has identified 4 targets along the strike length of the 24-kilometer Batman Driffield trend that are projected to have the potential to add between 1.8 and 3.5 million ounces. Last year, we drilled on the South Crosslode, and I'm going to turn to that in just a moment, which is one of the 4 target areas, and we had a very successful drilling program. The slide we're looking at here shows just kind of the plan view of last year's drill program. Phase 1 is the area off to the left here, the center, where we were drilling in the northern part of the Batman deposit, doing some infill drilling, testing limits of the mineralized structure, providing more definition to that part of the model. And we drilled a number of holes that had grade where we didn't anticipate it, higher grades than we expected, and so we were very pleased with that. You see this green colored arm sticking off to the northeast. This is the South Crosslode. And this is what we believe is a connector from the Batman deposit to a line of exploration targets as we go northeast in the Batman Driffield trend. That is the connector geologically between the structures. The interesting thing about the drilling in the South Crosslode is that while we encountered mineralization that's very similar to the Batman deposit, i.e. a sheeted vein style mineralization with very, very narrow veins and maybe 10 to 15 veins per meter, all of which have minor or small amounts of gold. This is very typical of the Batman deposit. In the deeper portions of these holes, below 100 meters, in over half the holes, we encountered quartz veins with some sulfide mineralization that were much thicker than the millimeter to centimeter veins that we normally encounter. And they had much higher grade. For example, we had one hole that had a 0.5 meter vein that was 50 grams per ton. We had another hole that was a meter at almost 13 grams per ton. I'm sorry, almost 26 grams per ton. Another hole had 2 meters of solid quartz veining that was almost 13 grams per ton. It's very early, and we're very excited about what we've encountered, but I would have to be completely honest and say we don't completely understand what we've encountered. And this could be the top of a bigger system that could be higher grade, something that could be mined from underground mining methods. And that would be very exciting for us. So the conclusions of last year's drilling program are we expect to add resources. Given the fact that some of these resources are inside of the pit shapes, and you can see some outlines there on this slide, we expect that some of these resources will immediately convert into reserves in the new feasibility study. And so there's some very tangible benefits from the money that was spent on this drilling program. And we've perhaps scratched the surface on something that we may be very, very excited about in the future as more exploration is undertaken. So just to wrap this up so that we can kind of get back to a little bit of a more conversation on some of the important facts, let me just summarize this, that, Mt Todd is a very large, high-quality gold deposit in what we believe is one of the most mining-friendly jurisdictions in the world. The drivers for this year, the things that are going to add value, obviously, as we complete the feasibility study and announce new resource estimate and reserves that will be benefits from last year's drill program. The feasibility study itself, as I mentioned, is focused on a throughput, a scale of project that's roughly a third of what we've evaluated previously. The initial CapEx is targeted to be $400 million. That's a 60% reduction. The reserve grade, we're prioritizing the grade. We're going to see a reduction in tons. We're going to see a reduction in reserves from previous reserves. But we believe that having a 25% increase in grade will result in tremendous benefits for the project and ultimately our shareholders. With these higher grades, we're going to be able to sustain production in the range of 150 to 200,000 ounces of gold per year, even though we have much smaller throughput. We're preserving the opportunity for future expansions, and that's something that's important to us. As we mentioned previously, this will be the design of this new plant will be what we typically refer to as fit for purpose, with a very conventional flow sheet. We're going to use contract mining, third-party power generation, design and construction practices that are quite commonly used in Australia. I think it's important to note that Mt Todd is permitted. It's a ready-to-build development project in a great jurisdiction, and we enjoy being in a time and an environment of a strong gold market. And this idea of diminishing major gold discoveries, I think, is going to play to our advantage. So with that, I'm going to stop the presentation and go back to a conversation with Anna.
All right, great, Fred. Let's talk about the new Mt Todd feasibility study. It seems very exciting, and it might be the catalyst that the market's been looking for. So Mt Todd, as it moves closer to development and ultimately into production, with the feasibility study expected to be completed mid-year, how do you think the results will be received by the market?
You know, it's interesting. We've already received positive feedback regarding the size of the project, the initial CapEx, the reserve grade, the expected production from a number of different sources, both those who know the company quite well, investors and others. But I believe the market is hungry for fresh ideas related to development of projects. And I believe that the paradigm shift that's represented in this study, thinking about something substantially smaller, will be very well received. We expect the lower CapEx and the improved reserve grade to resonate with many as we're able to publish results the middle of the year.
And it sounds like you're actively pursuing these strategic transaction. It's going to maximize value for Vista shareholders. So please provide an update on your efforts to identify the right transaction. And do you believe companies may be sitting on the sidelines waiting for the results of the study to be published before maybe taking action?
We continue to work with the Sydney, Australia office of CIBC Capital Markets to identify and engage with companies possessing the technical capacity, the financial strength to advance Mt Todd, whether that's through a joint venture, a project level transaction, or even a corporate level transaction. In some instances, yes, I think that people are sitting on the sidelines waiting for the results of the feasibility study. But since the first of the year, we have signed a number of confidentiality agreements, and there are companies who are advancing their due diligence of Mt Todd. And so I think that while we already have some people that have shown interest, since the announcement of the new feasibility study, I believe that we'll see more interest once those results are announced.
And you also mentioned a variety of potential strategic transactions that could move Mt Todd in construction and then production. So does this mean you would consider a corporate transaction and sale of Vista Gold? Would you consider building Mt Todd on your own?
We're open to all options, I think, is the simple answer. We would consider a joint venture, a project level or corporate level transaction, if it represents a recognition of the intrinsic value of Mt Todd and creation of value for our shareholders. we're not interested in a transaction that gives away Mt Todd, but if there's an opportunity to create value for our shareholders, we are keenly interested in that. With regards to building it ourselves, that's an interesting question. The market is ever changing and evolving, and we are always sensitive to dilution. But given the right financing strategy, timing, structure, cost, et cetera, and with the support of the market, with the support of our largest shareholders, we would be prepared to undertake development of Mt Todd on a standalone basis. But it would be driven by support of the market and our ability to complete the financing in a way that would preserve the value, the upside for our shareholders.
And I suspect there are very few gold projects the size of Mt Todd that are permitted and ready to build. So regardless of the path that's chosen to develop Mt Todd, what would you have to do to commence construction, and how long would construction take before pouring first gold?
Yeah. Well, I think you're right. I think there are very few projects that are of this scale that are fully permitted. From the point that say at the conclusion of this feasibility study and a transaction or a decision being made that the project is going to advance, the time frame basically looks like this. We're looking at 12 months to complete perhaps some additional testing and then detailed engineering and design. And at the close of that period, there will be wrapping up and closing the financing arrangements. And then we're looking at an 18-month construction period. That would end in, at the end of construction and commissioning, you'd see first gold poured. But we're anticipating that we'll be looking at another 6 months of ramp up to commercial production. So, from that point that the decision was made, we'd be looking at 30 months to potentially pouring the first gold, but we estimate 36 months to the point that we would be in a position to declare commercial operations and be achieving commercial production.
And last year, you successfully completed a drilling program totaling 6,776 meters and reported positive results in the program earlier this year. So what should investors understand about those drilling results, and why should they be excited about the exploration potential of Mt Todd?
Yeah, well, like I said, we first of all, the drilling program we expect is going to add resource ounces. And that's always important. Mt Todd is big, but it doesn't hurt for it to be a little bit bigger, especially if those ounces are within the current pit shapes. And so given that that's the case, we expect some of the ounces that are added in resource will be converted to reserves. And that'll be reflected in the new feasibility study. Second, as I was mentioning about the South Crosslode, as far as future exploration potential, I think that we're on the cusp of a new exploration model for the Mt Todd Gold District. Having encountered these thicker and significantly higher grade veins in the deeper portions of these first set of holes, I think is very exciting. And as future drilling is undertaken to evaluate and build on the knowledge that we gained in 2024, I think there's potential for a big shift in the way we view what kind of mineralization and what kind of development opportunities are in store for the district. So, we've always said that Mt Todd, with its almost 1,600 square kilometers of exploration licenses, that there's bound to be several new additional gold deposits that are discovered over time that will add to and build further credibility for the Mt Todd Gold District. And we're excited to have just scratched the surface on that.
And last question for you, Fred. Your stock has been performing quite well, and it's up 37% for the year, so outperforming a number of your peers. So what do you see as the key drivers with this performance?
Well, I think the first thing that comes to everybody's mind is gold price, and that benefits all of us, not just Vista Gold, but our peers. In addition to that, I think that some of the key drivers and catalysts have been the work that we're doing to take a fresh look at Mt Todd, and the way that it might be developed. I think the paradigm shift, the stepping away from, what 14 years of work at 50,000 tons a day, and looking at 15,000 tons a day, and a way to build the project and build the plant more efficiently, and to de-risk the project. Smaller is always less risky than bigger, and so I think that these things have resonated with the market. The fact that we're looking at a 60% reduction in capex, and at the same time we reduce that size. We have 15% or rather 1/3 throughput, but 35 to 40% of the gold production. I think that all of these things, the fresh look, people are viewing this as, Vista is doing the right things to minimize risk, create value, and to move the Mt Todd project to a position where development is likely, whether that's through a joint venture, a transaction with another party, or we do it ourselves. I think the future is bright for Mt Todd, and I think that that's a big catalyst.
Wonderful. Well, thank you for this great update. We look forward to seeing you again soon. Fred, we appreciate your time and presentation with us, and good luck.
Thank you very much, Anna.
All right, everyone. We'll be right